So we've got opportunity zones. We've got 45Z. You spoke a little bit, Bruce, about, Farm Bill play in there. And I want to share what else is kind of in this big, beautiful bill that excites you.
Again, kind of like Steve, it's hard to say what's in and what's not because there's such a tsunami of events
Yeah.
that the things get pulled along with it. But I would say that the Farm Bill, the negotiations around the Farm Bill, have been very like anticipatorily positive if things happen, promise to pay money and so on. But the crop insurance provisions have been made even more lucrative to some degree or more positive in some sense. And the subsidy rates on certain coverage products and especially group products have been increased still further and kind of putting the safety net at a higher and higher level, ratcheting up reference prices, ratcheting up other things that provide a minimum support for agricultural producers. I think there's a very strong appetite to continue to support agriculture. And again, the certainty, as you pointed out, is a really critical thing. Not knowing what your prices are is one thing. Not knowing if you're going to have insurance is a completely different thing.
That is true.
And so I think it creates the administration's posture is that if there's any damage done from things like tariffs, then there would be something like was done in the first round with MFP payments or other versions of offset to try to make the farmer whole.
So when we talk about that from a wealth management investment standpoint, does that make, and this may sound like a dummy question, but does that raise prices of farmland investments by having that security element there? Does it just kind of does it make a less risky investment, right? And so do you see like a risk-free return trade-off with that? I mean, how does having more robust crop insurance impact it from the standpoint of, I've got $4 million of capital to deploy. I think this would be an investment now that we have more secure crop insurance. It's a better investment, or does that maybe ratchet down the returns a little bit?
There are, 10 other features that impact the rate of return to farmland, but this is definitely one of the big ones. And it creates safety in the amount that a tenant can pay in crop insurance or in cash rent. And so that is a positive, right? But as you said, it also reduces risks. So the risk premium tends to go away. And if you said I can buy a treasury bill or a farmland investment, they're both going to yield the same, you would make a different choice. So I think it's not quite 100% clear cut exactly what the total effect is. There's a lot of other interrelated parts, but I think crop insurance is absolutely underpinning the value of farmland and creates a safety net that's hard to overstate the importance of. And that is very positive for the support system for agriculture. There's a lot of other practicalities though. And so interest rates are also really critical to get right. The long-term inflationary effect, that's really important to get right. The long-term income effects, those are really hard to get, an accurate understanding of at a moment in time. And they're all very interrelated.
Well, and this brings up a conversation that you had at the Land Expo. And for those listening in, I know our listeners have grown a lot in the last 2 years. The Land Expo is by and large the conference in the wealth management space you should go to if you're investing in farmland opportunity zones, DSTs, right? If those are things you're putting your clients in, and I know a lot of y'all do, I would highly encourage you to check out the Land Expo because it is the spot where all these experts that run and manage these products connect with people deploying capital in the products and also connect with farmers, right? It's like one awesome Venn diagram of everybody who's there. So I do want to share about that. But at the last year's Land Expo, I think, Bruce, you got up and you made a comment about, who thinks farmland is too expensive, right? And this big show of hands from the crowd, right? Everyone thinks it's expensive. And then you were like, who wants to sell their farmland? And like every hand drops, right? And then you furthered it with who'd like to buy the neighbor's farmland. And all the hands go up again, right? So I think to speak of the security premium put on with things like crop insurance and even farm insurance to some extent, I think you do have a unique asset class, because if I ask that about Microsoft stock, right, there's a technical analysis we can do of Microsoft stock. There's fundamental analysis we can do. And we can say, based on the revenue brought in by the company, this is what the price should be given other comparable risk companies. And if that price is too high, I will sell. I'll buy something lower. If the price is too low, I'll buy more. I don't think you'd have the same hands in a room with Microsoft as you do with land.
You raised a couple of points, and Steve's built an entire business around one of these points in particular. It's a very complicated asset to manage. It's a very complicated asset to buy. It's a very complicated asset to sell. And so you have to have some others involved in that transaction generally for that to work. It's otherwise pretty difficult to do on your own, and especially at scale. And so who should own farmland? Who does own farmland? How are transactions handled? It's a very thin market. You've experienced giant swings up and down in volumes. And so I think all of those come into play as well in figuring out what the return profile is if you're viewing it as a financial asset. And that's a really critical way of viewing it.